So let's talk now about the underwriting of an income protection policy. And this is very different from a life policy. So an insurer essentially is significantly more likely to have to pay out on an income protection compared to a term insurance and even a critical illness plan. This is the most likely to be claimed upon, and as such is going to have the most stringent underwriting going. Hazardous pastimes that you have, your lifestyle, your occupation, all of those are going to have an impact on your plan and the cost of your plan. So your underwriter is going to look at these morbidity tables, the incidence of disease, rather than your mortality tables. Essentially, that's to deals with death, and all of the several factors will be needed to be taken into account around your morbidity risk to arrive at the premium that's right for you. But this is the most expensive of the insurances, generally speaking, because it's the one that's most likely to be claimed upon. So in general terms then, the morbidity risk issues for income protection are: the older your proposer, the higher the premiums, of course. The shorter the deferred period, the higher the premiums. The longer the term, the older you are when it stops, the higher the premiums. You'll pay more if you're a smoker or a user of tobacco-based products. And you'll also, of course, if you add indexation on, you will see your premiums escalate in line with the sum assured that goes up every year to take into account of inflation. So there's lots of things, lots of parallels here to consider. And certainly the earlier you take the policy out and the shorter it finishes, with the longer the deferred period, the more palatable the monthly cost will be. So if you do apply for an income protection plan, in keeping really with a lot of the other insurances we've talked about, the underwriting could spurt out various different responses. So you might be accepted on normal rates, which basically means whatever the quotation was that you're provided is the actual cost of the plan. You could see there being some kind of weighting or loading, which essentially means that there's an extra cost put on given your circumstances. You might even see exclusions put in place. We will cover you, but not when you play football. And also, of course, there could be a declination. They could decline your policy outright, or they could postpone it. In other words, they could turn around and say that we're not prepared to do it now, but we might be able to consider doing it in certain circumstances or when certain conditions have arisen. So ultimately, all of the usual underwriting outcomes will apply here that we looked at in life cover and we look at again when we look at critical illness. So I want to talk a little bit here about the physical hazards and the moral hazards that insurers need to consider at all times. So some of the physical hazards that are going to have an impact on premiums are things like hazardous pastimes, as we've said. So if you like a bit of private aviation, or you like to ride your motorbike around Donington Park every Sunday or something along those lines, then you are likely to see either an exclusion or an increase in premium for those particular activities and any claim that results from you undertaking those activities. There's also things like high business mileage, which will always be asked when dealing with income protection plans because of the essentially increased chance if you undertake high mileage if you be involved in an accident on the road. There's also the moral hazard for the insurance company of those taking out an insurance whilst already in poor health, and you can probably imagine that claims that are made in the early months of a particular plan are likely to be scrutinised far more than anything that's been in place for a few years. So what of then the different occupational classes that apply? Really, income protection is the only insurance where this matters to your ability and the cost of your plan. But again, so many of us get injured and have accidents at work that the likelihood of that happening and the impact that would have are going to have an effect on your premiums. If you work in an office, you work in a clerical environment, that would probably be class 1. Light manual, caring, etc., nursing, that's likely to be Class 2. A skilled worker, an electrician, a plumber, they're likely to be in Class 3. And if you work on the motorways, actually putting out cones at night for roadworks, then heavy manual, that's going to be Class 4. There are also, beyond these classes, you will find there will be certain occupations that will not be insured. Things like fishing, armed forces, those sorts of things. You're going to need a specialist insurance policy for those. Generally speaking, though, the higher up the class number you go, the more likely your premium is going to increase. So what of guaranteed premiums and reviewable premiums? Well, we've seen this on previous slides as well, where you'll be given an option essentially when you start the plan to have either guaranteed premiums, which means that they will not increase other than predetermined and escalations, and you know the cost of your plan throughout the term. This gives you peace of mind of knowing it should be affordable in the future. A cheaper option is to take a reviewable premium approach, which means that you will have your premiums reviewed every 5 to 10 years. Crucially, not in line with your health. You will not have any new health assessment. They will look at the morbidity tables to work out the general cost of insurance for somebody of your age at that point, and if it's gone up compared to what it was originally intended to be, you'll pay the extra premiums from that point onwards. In theory, premiums can come down. You can probably imagine how often that happens.